Hey everyone, Bowen from Enhanced Asset Management here. Just back with a quick update today, just on the August reporting season and how some of the stocks that we own reported. So I'll just start with Life 360. They reported quite early in the piece, and their result was fantastic. They reported another really strong set of numbers, with their monthly active users growing another 31% up to 70.6 million. And the increase in users, which was ahead of our expectations and ahead of management's as well, allowed management to upgrade their guidance for FY24, and they increased their revenue forecast by 1%. But the most pleasing thing was that they increased their adjusted EBITDA forecast by around about 18% at the midpoint, which was a fantastic result. And obviously, we upgraded our forecast off the back of this, and things are going really well for the business. You can see from the share price chart here that it's just had a fantastic run, and it's been one of the best performing stocks in your portfolio. Now, we've taken a little bit of money off the table at around just over $19 last week or the week before, just because we feel like the risks are now sort of outweighing the potential benefits in this one in the short term. Our sort of really optimistic case of evaluation is just over $20, and the share price is almost there now. So we took this opportunity to take a little bit of money off the table. If we see a potential pullback in the future, we might allocate that money back into 360. But you should be really pleased with the way that this one's performed, and we're just sort of deleveraging the portfolio a bit by taking a little bit of money out of this one. The next stock I just wanted to run through quickly was ResMed. Again, they reported pretty early in the piece, and similarly with 360, it was another fantastic result. We saw revenue up 11% for the year, up to 4.7 billion. And again, similarly with 360, the pleasing thing with this result was the margin expansion, and we saw the quarter four gross margin of 59.1%, which was an all-time high for ResMed. And the guidance for FY25 margins were between 59 and 60%, which were higher than our forecast and higher than the broader market's forecast as well. And we've seen some good share price appreciation off the back of this result. Our valuation increased with these solid forecasts, and we're sort of valuing ResMed at around $37.60 per share. And similarly with 360 as well, the share prices followed the earnings on this one, and we've seen some significant appreciation. We're now well ahead of where we were, August last year when we saw the big GLP-1 drug sell-off. And again, this has just been a fantastic contributor to portfolio performance. We're still full weight in ResMed, and we can see this one trending up towards $40 pretty comfortably. Next up, we had AGL, and AGL again reported an extremely strong FY24 result. They reported their EBITDA and NPAT, which were both comfortably above guidance that they provided in May. And guidance for FY25 was also ahead of our forecasts. In line with our forecasts, and marginally ahead of what the market was expecting. So the stock's still really cheap, and we're pretty comfortable owning at current levels despite the share price appreciation that we've seen in the last few months, as I'll show on screen here. So obviously it's come a long way since we purchased our initial position back in February. Our initial thesis was we can see this one being up over $10, $11. Excuse me, and obviously we've got there now. FY25 obviously looks a little bit better than what we were expecting, and we're pretty confident holding this one over the next couple of months as well. On to AUB, which is obviously one of the longest holdings that we've had within the portfolio, and they reported their FY24 results, which were really strong as well, with revenue up 20%, underlying EBIT was up 23%, and profit before tax was up 27%. So, another really strong set of numbers for AUB. We took a little bit of money off the table prior to the result, just because we thought, again, similarly with 360 at the moment, that the potential benefits in the future kind of was starting to outweigh that was starting to be outweighed by some of the risks that we see. Obviously, the insurance cycle's slowing down a little bit. Premium growth not as strong as what it was 24 months ago when we took the initial purchase in AUB. But we saw earnings guidance for FY25 of net profit growth between 11 and 17%, which we do know AUB are typically pretty conservative with their guidance, and they tend to upgrade throughout the year. So despite taking a little bit of money off the table, we are potentially looking to reallocate that back into AUB in the future. The result allowed us to increase our valuation up around about 4% to $34.50. And I'll just put the share price chart up on screen for you. So we did take some money off the table around $34 pre-result. And we saw a little bit of share price weakness since the result. As we said, management are normally pretty conservative with their guidance, and we're pretty confident that this one's going to have another strong 12 months in it. So we may look to allocate that capital again in the near future, but at the moment, still pretty happy holding AUB where they are at the moment. And new addition to the portfolio, Worley. They reported a really strong FY24 result as well, with revenue up 18% and underlying EBITDA up 24%. Net profit after tax was also up 27% to $416 million. Management did state that earnings in FY25 are expected to grow at a slightly more moderated pace than what they did in FY24. However, the margin guidance was really solid, and we're pretty happy with the result that Worley put out. Our valuation off the back of this one increased around 3% up to $15.70. And again, we've seen a pretty strong share price reaction to the result, which was really positive to the portfolio. So the share price is around $15 at the moment. We're still only around about half weight in Worley, so we've got some wiggle room there to allocate some additional capital if we see the opportunity in the next couple of months. And finally, on the final day of reporting season, Webjet, who weren't scheduled to report, released a trading update. And unfortunately, that update showed that trading in June and July was slightly weaker than expected. And this was impacted by the Paris Olympics, as well as the Euro Football Championships in Germany, which, we were sort of expecting that these sort of things would be a tailwind and a positive for the business, but actually a lot of the business that Webjet operate is German outbound travel. So when you have these sort of events going on in two of their biggest markets in France and Germany, people aren't leaving those countries. So people in Paris and France are staying in France, and people in Germany are staying in Germany throughout these periods of time, which obviously has resulted in a slightly weaker trading environment, and Webjet guided for some slightly weaker revenue margins than what we had expected. However, they did state that August had a really strong rebound in transactions, up 30% on the same period last year. So, we don't see this as a structural issue with the business, and we've seen a little bit of share price weakness, as I'll show on screen here. But we're really comfortable with the proposed demerger, and we think that'll be a good catalyst for the business moving forward. We don't see anything to worry about here. As always, guys, this is general advice only. If you require any further financial advice, please speak with your advisor. We'll be in touch shortly, and hope you're all doing well. Thank you.